Hey, I'm Jack, the Jacked Up Finance, and today I want to talk you through why you should invest. So this is a new channel. I want to be straightforward with you all. The purpose of this channel is really to help to demystify finance and also investing. I think the finance industry kind of prides itself on using as many kind of strange acronyms and wordings and kind of nomenclature as possible to kind of gatekeep investing in finance. So I work in the finance industry, have for about 5 or 6 years, and I think that I've been able to see a lot of it. So again, my goal here is to demystify finance, demystify investing, and bring it to the masses like you all. And also, I just think it's a great skill for you all to know. So let's start from the top. Why should you even invest? Why does it matter? And I think for me, it's pretty simple. It's about the freedom that you can get from it. Investing yourself, investing in your IRA, investing in in what you think makes the company and that kind of makes the world flow, gives you freedom. As you can generate some great returns there. Of course, your main job is your main source of income, but I truly believe if you invest wisely and consistently over 20 or 30 years, you can get pretty great returns and you can get freedom from it. You don't necessarily have to just trust the investment advisor that says, trust me and do this. It's about educating yourself about the outcomes, your goals, your objectives, and being able to have a discussion with those investment professionals if you choose to use them. But also, again, I think you can generate some pretty great returns if you invest with yourself. So that's the goal. I really am trying to educate you all, demystify finance, and also just explain how you can gain your own freedom through investing. So I think a lot of people, when they think about investing, this is what they normally see. They think of these hedge fund guys, these private equity bros, these kind of finance connoisseurs who are just kind of in New York, black box, black hole, kind of running their algorithms, and that's it. Let me show you who the actual investors are. It's these guys. And now, to be clear, I kind of work in the PE industry as well, so a lot of this does exist, and a lot of them are great. A lot of them have great returns, but I would say this is a very small minority of kind of investors in the field. Most of the money in the system, in terms of investors, are people like this. It's their IRA dollars at work, through a Vanguard or something like that. So investing is really for everyone, especially in this day and age, whether through your IRA, through Robinhood, or anything in between. I think retail investors specifically. So again, retail is kind of another keyword. Essentially, it just means the masses, kind of just retail investors, meaning not accredited investors that maybe have $1 million or million plus of assets, and also not institutions. So kind of just everyone else that's in retail. I think retail investors have a lot of power, and also just are a very large percentage of their total invested income overall. So you're a retail investor. I'm pretty much a retail investor too if I choose to do it. But just know that you have a lot of power and you can also educate yourself very strongly. So why should you invest? It just gives you freedom, education, freedom, everything. So at this point, I just kind of want to give you 4 tips in this first video for investing. As I go through the rest of these videos and as I work to build out this channel, I'll go into things kind of more in depth. But for now, I just want to start with 4 tips. So first off, invest in what you know and what you care about. So first off, Peter Lynch, known to be one of the best investors of all time, one of his best takeaways is you should always be able to understand what you own. And I'll let you read kind of something on this on your own pace if you would like to. But a lot of what he says is you should invest in what you know. And especially through that, you can make some pretty great investments. So thinking about that, I like to work out a fair amount. So I like to wear a Gymshark. I like to wear some Nike. I like to wear some Adidas, something like that. But as you kind of work in a space like that, where you just kind of naturally are interested in a space like that, you'll learn to know the market a lot better than someone else. If you're interested in it, you really enjoy the space, and you spend time with it, just based off you being in proximity of that space, you will know the industry a lot better than even some investment professionals. You'll know, okay, this is a great product. This is a great space to be in. I want to invest in this. So my brother, for instance, he is very technical. So he used to build computers. And one of his kind of best investments that he thought of is probably about 5 or 10 years ago. He said we should invest in NVIDIA. So I ended up putting some into it, but not too much. And I'm not going to claim like that makes me the best investor of all time, but point is, he was technical. He liked to build computers, so he knew that field very well. Knew NVIDIA was great in the space, knew that it had some great potential, but also just a core and great product. And from there, he wanted to invest in it. And it can be that simple. You think this product's great, companies are built off the backs of products. So if you think the product's great, invest in it, see what's going to happen. But the fact that you know the product, you like the product, and you like the space, already makes you a lot more educated than you might think, just by being in the space itself. So don't discredit the knowledge you've already built up just in your day-to-day life. It can be incredibly valuable to your investment experience. Secondly, find your niche. I think you can be a jack of all trades if you want, and that can definitely work well for you. But I think especially as a retail investor, kind of like this, kind of like point one, invest in what you know. If there's an industry that you really like, or maybe a type of security you really like, bonds versus kind of just stock like you would see on the equity markets, like on the NASDAQ. I think anytime you can find your niche and really specialize in that, that's where you're going to generate the best returns. Especially if you're a retail investor and you don't have time to spend hours and days to look into everything. I think you should really just kind of own just a small piece of the market, know, for instance, semiconductors or chips or something like that, know that area very well, make that your expertise. Again, ideally, it should be something you care about and you're already interested in. But if you know that, then I think you can do pretty well with the space. So like this one, for instance, if we're looking at like some retail companies, this is kind of all over the place, but let's say you really like Aldi's, for instance. Aldi, it's kind of coming more to where I am. If you know the grocery area, maybe you'll see that Aldi's a really great pick and you take it off from there. But it's really about kind of expanding the knowledge base that you already have, investing what you know, finding your niche and taking it from there. My third tip, you only lose when you sell, but be careful. So one of the mottos I like to go for investing is KISS. Keep it simple, stupid. So a little bit derogatory or whatever, but it's fine. But I think tips like this on the surface level might seem pretty stupid, but I think it is very valuable. So again, you only lose when you sell. So let's look at this, for instance. So this is the S&P 500 over the last year. So if we're looking here, we can see it's around 6,000. And then what happened here, it went to a 5,600 and then it dropped all the way to 5,000. So if we think about Liberation Day here in the US, again, regardless of politics, it created a bunch of instability in the market. People had no idea what the tariffs were going to be, how long they're going to be in place, and their just overall effect. So it creates some instability in the market. So let's just say I bought in. I just bought kind of 5,600 of the S&P 500. If I had sold kind of April 8th, once kind of the instability of that Liberation Day had effect, at 5,000, I would have lost $1,000. And this is where this comes back in play. You only lose when you sell. So until you kind of crystallize, you harden that gain or loss by either buying or selling, it's all just kind of fake, for better or worse. So in this case, let's say I'd bought in 5,600 April 1st. If I had sold April 8th, I would have just lost $600 or $1,000. So you only lose when you sell. It's really that simple. Whereas if you had kept holding it until today, it's not $6,400, you would have made $800. So again, it's very simplistic, but you only crystallize or harden your gain or loss when you sell or buy. So just be aware of that, especially if you're a retail investor where you're looking at the 20 or 30 year time horizon. It's incredibly important that you don't get too cute with it. You don't try to buy and sell daily or something like that. I think you can run into some massive issues like that. But also if you did that, you might have sold here, you might have thought tariffs were going to get even worse, when in fact they've gotten at least kind of stabilized some. So you kind of ride through that trough. So again, you only lose when you sell. But of course there's caveats, and be careful with that. Lastly, consider your ultimate goals. Whenever you're investing, you need to think about your goals. So for myself, I have a couple of different portfolios. One, that's maybe 5% of my total invested income. I just try to have fun with. I try to make it as volatile as possible. I don't necessarily have any goals associated with that account. My kind of goal is to learn from it. And there are cheaper ways to learn, but for myself, I find the best way for myself to learn is to have real money on it. But you should consider your goals. If you have an investment advisor, they will talk you through the goals as well. But the goals could be as simple as, I want my investment account to make $1,000 this year. Or it could be 1%. I want my investment account to outpace the S&P 500. Or it could just be a hard number. I want my returns to be greater than 5%. Or it could be based off some sort of life goal. Excuse me. So it could be, I want to be able to pay for my kids' college in 15 years. I want to buy a house in 3 years. I want to retire in 40 years. So there's lots of different options here. But ultimately, your goals will define your risk tolerance. If my goal is to retire in 30 years, then my risk tolerance would be very high. And that's kind of the boat I'm in. So I like to invest my stuff in pretty risky assets. But if your goal is I want to retire in 3 years, that's a much different goal. That's a much different outcome. And that is a very different risk tolerance. That would be a much lower risk tolerance. So the goals are incredibly important because I think it helps to kind of shape everything else. Based off your goals, that will define your risk tolerance. And from there, it'll also define kind of where you actually invest those assets. So that's pretty helpful. Lastly, I'll go through them one more time. Invest in what you know and you care about. Again, I wouldn't discredit yourself as a general consumer. The knowledge base that you have in consuming and living with the products is invaluable, and in a lot of ways actually superior to the knowledge that your wealth manager or some sort of advisor might know. Find your niche. Again, do not discredit the knowledge base you have. Third, you only lose when you sell. So again, it's simple, but don't try to time it too much. Don't get too cute. Trying to time the troughs and the dips and the peaks. Especially if you're investing for 20 to 30 years, ride it out and you'll be in the green, historically speaking. And lastly, consider your goals. The goals really define everything. They're going to define the ultimate goal that you're trying to achieve, which will define your risk tolerance, and that'll ultimately define what you want to invest in. So let me know if you have any comments for kind of future videos. Again, my whole point here is to demystify finance. So I'm going to talk through your IRAs, kind of what you can invest in, as well as kind of some general tips for investing, and also just even talking through some of the nomenclature of it. So make sure to comment, make sure to subscribe, and I hope these tips were helpful. Thank you.